Everybody knows about Hindustan Aeronautics, but there are many significant players in Indian defense industry. The Indian government has selected the defense sector as a focus point for the Atmanirbhar Bharat initiative. Today, we are going to discuss the top 10 defense sector stocks to invest for the long term. Even in the middle of global uncertainty, the defense sector was booming. Let's decode what is happening. Is this an opportunity for investment? If you are new to my channel, please do subscribe. Also check out my playlist, Best Stocks to Buy for the Long Term. Some strategic moves and developments within the Indian defense sector have played a major role. The first reason is the Make in India initiative. This aims to increase domestic manufacturing capabilities and reduce dependence on foreign arms dealers. The second reason is high-profile deals and technology transfers. The third reason is the strategic implementation of the Defense Production and Export Promotion Policy 2020. This policy aims to achieve a domestic defense production value of Rs 1,75,000 crore and $5 billion in defense exports by 2025. The fourth reason is collaborative initiatives and technology transfer. Mandatory sourcing notifications from domestic companies, coupled with collaborative initiatives for Make in India and technology transfer, are further enhancing the sector's expansion potential. The fifth reason is high-value order books. Indian defense companies have received orders exceeding 4 to 10 times the company's revenue. With favorable government policies, the defense sector will continue to flourish. Let's check out the top 10 defense sectors you should invest now. The first stock is a leading precision engineering solutions company. This company is engaged in the manufacture of mission-critical precision components. They serve projects of high national importance. This stock primarily serves customers in the clean energy, nuclear and space and defense sectors. I am talking about MTR Technologies. The company currently operates through 7 manufacturing facilities. These facilities are located near major defense organizations. MTR's noteworthy projects include providing engines for the PSLV-C-25, which launched the Mars Orbiter mission spacecraft, and being integral to the GSLV Mark III engine for the Chandrayaan-2 mission. 50% of MTR's revenue stream comes from their client Bloom Energy. 39% of their revenue is coming from domestic sales and the rest, 61%, from exports. MTR Technologies, with a market capitalization of 7,017 crores, operates with a current stock price of 2,273 rupees. Price to earning ratio is 67.69, lower than its sector pay ratio of 91.01. Stock price rose 35.37% and underperformed its sector by 42.13% in the past year. Debt-to-equity ratio of 0.23 is less than 1 and healthy. Return on equity for the last financial year was 16.67%. The company has low debt. The company's profit growth is better than the industry median. The stock is overpriced but is not in the overbought zone. It is a good time to consider buying the stock. Analysts have given a good buy rating. The second stock is the world's largest forging company. It serves several sectors: automotive, railways, aerospace, marine, oil gas, power, construction, and mining. They are among one of the best aerospace forging companies in India. I am talking about Bharat Forge Limited. They are also a leading supplier of various components for the aviation sector. Did you know that Bharat Forge is part of the prestigious Kalyani Group? The group boasts an annual turnover of more than $3 billion. They have got their hands in various sectors, including engineering, steel, automotive, industrial, renewable energy, urban infrastructure, and specialty chemicals. When it comes to market dominance, they are India's largest manufacturer and exporter of auto components and a leading player in the industrial components arena. They manufacture critical components for wind, hydro, and nuclear applications, as well as defense and aerospace. Bharat Forge operates through 15 manufacturing facilities across 3 continents: India, Europe, and North America. Their Pune plant alone is the world's largest single forging plant. This company is a key supplier to major auto manufacturers worldwide, including Volvo, General Motors, Tata Motors, and more. They have been expanding strategically through acquisitions. From JS Auto Cast to Tork Motors and Sanghvi Forging, they are broadening their portfolio and market presence. Bharat Forge, with a market capitalization of 55,558 crores, operates with a current stock price of Rs 1,193. Price to earning ratio is 70.89, lower than its sector pay ratio of 91.01. Stock price rose 39.18% and underperformed its sector by 38.32% in the past year. Debt-to-equity ratio of 1.02 is higher than 1. Return on equity for the last financial year was 7.87%. The company has seen consistent sales growth and is generating increasing cash from operations. The company's profit growth is not better than the industry median. The stock is overpriced and not a good time to consider. The stock is in the overbought zone. But analysts have given a 60% buy rating. The third stock supplied the navigation system for Chandrayaan 3. This is the only company to supply optics to ISRO for space projects. I am talking about Paras Defence and Space Technologies Limited. They are at the forefront of designing, developing, manufacturing, and testing a wide array of defense and space engineering products and solutions. This company is the only Indian supplier of critical imaging components for space applications, such as large-size optics and diffractive gratings. The company operates in 4 major segments: defense space optics, defense electronics, heavy engineering, and electromagnetic pulse protection solutions. The company has 2 manufacturing facilities in Maharashtra, employing over 380 professionals. This company is trying to transition from a component manufacturer to a complete subsystem manufacturer. The company's defense exports have reached over 75 countries, contributing approximately 13% to its revenue. They have an impressive clientele. Government customers include ISRO, HAL, Bharat Dynamics Limited, while private customers include Tata Power, LT, TCS. Paras Defence, with a market capitalization of 2,762 crores, operates with a current stock price of Rs 711. Price-to-earning ratio is 77.22, lower than its sector pay ratio of 91.01. Stock price rose 15.17% and underperformed its sector by 62.33% in the past year. Debt-to-equity ratio of 0.04 is less than 1 and healthy. Return on equity for the last financial year was 9%. The company has seen consistent sales growth, low debt, and positive net cash flow. But the company's profit growth is not better than the industry median. The fourth stock covers the entire spectrum of defense and aerospace electronics solutions, making them a one-stop solution for their clients. Founded over 35 years ago, this stock has emerged as a key player in the defense and aerospace electronics sector in India. I am talking about Data Patterns India Limited. So what sets them apart? Well, they are among the few vertically integrated solutions providers, covering everything from space and air to land and sea. Their product portfolio is diverse, ranging from radars and underwater electronics to avionics and electronic warfare suites. Notably, their radar, contributing to 54% of the revenue, stands out as a flagship product. Currently, the company is actively engaged in supplying critical products to prestigious defense projects like the Light Combat Aircraft, HAL Dhruv, Light Utility Helicopter, and the BrahMos missile program. Their ongoing projects also include precision approach radars and various communications intelligence systems. Their key customers include Bharat Electronics Ltd, Hindustan Aeronautics Limited, ISRO, and DRDO, with DRDO contributing a substantial 42% to the total turnover. 45 to 50% of their total sales come from contracts with government entities. Data Patterns, with a market capitalization of 11,318 crores, operates with a current stock price of Rs 2,070. Price-to-earning ratio is 76.25, lower than its sector pay ratio of 91.01. Stock price rose 58.54% and underperformed its sector by 17% in the past year. The company is almost debt-free. Return on equity for the last financial year was 10.62%. The company has seen consistent sales growth and positive net cash flow. They are giving better long-term returns than the industry median. It is a good time to consider as the stock is not in the overbought zone. 40% analysts suggest buying the stock. The fifth stock is a premier shipbuilding company in India. This stock operates under the administrative control of the Ministry of Defence in India, and it's a key player in fulfilling the shipbuilding requirements of the Indian Navy and Indian Coast Guard. I am talking about Garden Reach Shipbuilders Engineers, GRSE's shipbuilding division, which contributes to a whopping 89% of their revenues, is dedicated to constructing vessels for the defense sector. What's fascinating is that they have not only supplied warships but also various other maritime products to government entities. GRSE's engineering division, though a smaller part of their revenue, less than 1%, plays a crucial role in offering portable bridges, deck machinery items, and marine pumps. GRAC engages in testing, overhauling, and assembling marine propulsion engines. Their partnership with MTU Germany is a testament to the high standards they uphold in engine production. With a proven capacity to build 20 warships at the same time, GRAC stands out with the ability to manufacture a wide range of ships. GRAC has strategically identified two focus areas. Firstly, their ship repair division, which has seen a surge in higher margin work orders. Secondly, they are actively pursuing export opportunities, with a focus on Europe, SAARC, ASEAN, African, and Latin American countries. The company's aggressive business development and marketing strategies are already bearing fruit with 2 ongoing export orders. GRAC, with a market capitalization of 9,561 crores, operates with a current stock price of 834 rupees. Price to earning ratio is 34.53, higher than its sector pay ratio of 33.26. Stock price rose 55.27% and outperformed its sector by 3.68% in the past year. Debt to equity ratio of 0.21 is less than 1 and healthy. Return on equity for the last financial year was 16.13%. The company has seen consistent sales growth with low debt and positive net cash flow. This company is giving better long-term returns than the industry. The stock shows good signs of profitability efficiency. It is a good time to consider. The stock is not in the overbought zone. 33% analysts have suggested that investors can buy this stock. The sixth stock provides technology for the defense and security sector. Headquartered in Hyderabad, India, with offices spanning the globe, including the USA and the UAE, the company is actively contributing to the indigenization of technologies for the benefit of Indian armed forces, state police, and paramilitary forces. I am talking about Zen Technologies. This company is a leader in defense training solutions, offering state-of-the-art training simulation equipment. They have also taken the lead in the counter-drone space, providing solutions to detect and intercept unwanted drones and UAVs within a 4-kilometer radius. They have also got a recurring revenue stream through annual maintenance contracts, AMCs. They have over 95% market share in tank simulators. The geographical split shows a balanced 56% in the domestic market and 44% overseas. Breaking down their revenue mix for the fiscal year 23, sales of equipment contribute to a substantial 78%, while AMC services make up the remaining 22%. With 3 subsidiaries, including Zen Medical Technologies Private Limited, Zen Technologies USA, INC, and Unistring Tech Solutions Private Limited, they are expanding their reach. With 110 plus patents filed, including the development of anti-drone system technology, Zen Technologies is pushing the boundaries. When it comes to clientele, Zen Technologies has earned the trust of the Ministry of Defense, Government of India, and its armed forces, security forces, and paramilitary forces. They aim to dominate the anti-drone market through continuous investment in research and development and plan to expand their presence in the Middle East and African countries. Zen Technologies, with a market capitalization of 6,073 crores, operates with a current stock price of 723 rupees. Price to earning ratio is 22.43, lower than its sector pay ratio of 64.41. Stock price rose 130.86% and outperformed its sector by 105.54% in the past year. The company is debt-free. Return on equity, ROE, for the last financial year was 11%. The company has seen consistent sales growth with low debt and increasing cash from operations. Company's profit growth is better than the industry median. It is a good time to consider. The stock is not in the overbought zone. The Indian government's Make in India push in the defense sector has meant that there is a move to source equipment locally. This is good news for public and private companies in this sector. The country's indigenous purchases, which were at 54% in 2019, are expected to go to 75% in 2024 and beyond. In the fiscal year 2023, the Indian government approved the acquisition of around 2.7 lakh crore worth of defense equipment with 99% domestic sourcing. India's capital expenditure towards defense has grown at a compounded annual growth rate of 9% from 2010. The seventh stock is a leading player in the construction of all kinds of vessels, repairs, and refits of all types of vessels, including periodic upgradation and life extension of ships. I am talking about Cochin Shipyard Limited. Incorporated in the year 1972, This company has built and repaired some of the largest ships for its esteemed customers across the globe. It has exported some 45 ships to various clients outside India. Cochin Shipyard Limited is India's first greenfield shipbuilding yard and the only yard that can repair air defense ships. The company has ship repair facilities at Kolkata, Andaman Nicobar, and Mumbai. It has an international ship repair facility at Kochi and has recently acquired Tebma Shipyard at Malpe. Their clientele in domestic markets includes the Indian Navy, the Indian Coast Guard, and the Shipping Corporation of India Limited. Its international clients list consists of the National Petroleum Construction Company, the Clipper Group, Vroon Offshore, and Sigba as. The company's revenue breakup showcases a diverse portfolio, with approximately 69.5% generated from the indigenous aircraft carrier, 13.5% from other vessels, 16.6% from ship repairs, and 0.4% from the sale of scrap and shipbuilding financial assistance. Cochin Shipyard has secured its position in the deep-sea fishing vessel through the strategic acquisition of Tebma Shipyards Limited. Cochin Shipyard, with a market capitalization of 16,766.14 crore, operates with a stock price of 1,274 rupees. The price-to-earning ratio is 39, higher than its sector pay ratio of 33.26. Stock price rose 102.06% and outperformed its sector by 49.12% in the past year. Debt-to-equity ratio of 0.03 is less than 1 and healthy. Return on equity for the last financial year was 6.88%. The company has low debt and positive net cash flow. The company is giving better long-term returns than the industry. It is a good time to consider. The stock is not in the overbought zone. The 8th stock is a key player in the business of designing, developing, and manufacturing subsystems for radio frequency and microwave systems. This stock stands out as one of the few private sector players in India with the capability to develop and supply MMIC products. This stock's impact spans across defense, space, meteorology, and telecommunication sectors. I am talking about Astra Microwave Products. Astra takes pride in its role in the design, development, and supply of high-value-added RF and microwave components. These find applications in critical areas such as defense, space, telecom, meteorology, and civil communication. Their revenue breakdown showcases the diversity of their contributions, with 48% from defense public, 48% from exports, 1% from meteorological applications, and 3% from space others. Astra's clientele includes prestigious names such as Indian Government Laboratories, Indian Defence Public Sector Undertakings, Indian Space Research Organisation, and esteemed foreign OEMs like LT, Adani Defence Aerospace, IITM. They have 5 manufacturing facilities in Hyderabad and an additional field test range in Bangalore. Did you know, 38% of Astra's workforce is dedicated to research and development? Astra is set to capitalize on opportunities worth approximately 24,000 crores until fiscal year 2028. This surge is attributed to the government's increased budget allocation in defense and other strategic sectors, paving the way for Astra's continued growth and impact. Astra, with a market capitalization of 5,821 crores, operates with a stock price of 613 rupees. Price-to-earning ratio is 90.28, lower than its sector pay ratio of 91.32. Stock price rose 98.32% and outperformed its sector by 23.17% in the past year. Debt-to-equity ratio of 0.29 is less than 1 and healthy. Return on equity for the last financial year was 10.86%. The company has low debt and positive net cash flow. The company is not giving better long-term returns than the industry. It is a good time to consider. The stock is not in the overbought zone. 100% by rating from analysts. The 9th stock is one of the leading defense public sector undertakings, PSUs, in India. This stock is a significant player in India's defense industry. I am talking about Bharat Dynamics Limited. BDL has a rich history of achievements, including the production of India's first state-of-the-art surface-to-surface missile, Prithvi. The Integrated Guided Missile Development Program, IGMDP, has been one of India's most successful defense projects, with all missiles, Prithvi, Akash, and Agni, successfully inducted. BDL is a powerhouse in manufacturing anti-tank guided missiles, surface-to-air missile weapon systems, air-to-air missile weapon systems, underwater weapon systems, and associated equipment. They play a crucial role as the sole manufacturer of missiles, torpedoes, and the weapon system integrator for the armed forces. They handed over the first radio frequency seeker of the Akash, next-generation weapon system, and received a substantial supply order for anti-tank guided missiles from the Indian Army. Notably, limited series production clearance was granted for the Astra Mark I missile system. The company is also engaged in the business of refurbishment and life extension of stored and deployed missiles. Bharat Dynamics, with a market capitalization of 25,379, operates with a stock price of 1,384 rupees. Price to earning ratio is 59.61, lower than its sector pay ratio of 91.32. Stock price rose 47.63% and underperformed its sector by 27.52% in the past year. The company is debt-free. Return on equity for the last financial year was 10.96%. The company has low debt, positive net cash flow, and increasing cash from operations. The company is giving better long-term returns than the industry. The company is showing good signs of profitability efficiency. 100% by rating from analysts. The 10 stock is the only listed drone manufacturing company in the country. There has been a big surge in drone usage in the country, and drone companies touched 50 billion in investments in 2023. This stock is a leader with 50% market share in the drone sector. I am talking about IdeaForge Technology Limited. This stock's business profile is diverse, manufacturing unmanned aircraft vehicles tailored for mapping, security surveillance. These drones boast a wide range of capabilities, from mining area planning to mapping applications. The company's drones play a crucial role in boosting operations for construction and real estate, while also aiding defense forces in intelligence, surveillance, and reconnaissance operations along borders. With an in-house manufacturing facility in Navi Mumbai, Maharashtra, spanning 21,000 square feet, IdeaForge maintains control over the entire production process, ensuring quality and reliability. They are ranked 7th globally in the dual-use category by Drone Industry Insights. The revenue is primarily product-driven, with 90.5% from the sale of products in 2023. The company also generates income from services, with civil and defense sectors contributing 21.5% and 69.5%, respectively. IdeaForge, with a market capitalization of 3,287, operates with a stock price of 790 rupees. Price to earning ratio is 510, higher than its sector pay ratio of 91.32. Stock price rose 17.51% and underperformed its sector by 57.64% in the past year. Debt to equity ratio of 0.27 is less than 1 and healthy. Return on equity for the last financial year was 9.85%. The company has seen consistent profit growth and sales growth. Company's profit growth is better than the industry median. This stock is a newly listed share and hence the high pay. Analysts appear to be bullish about the fundamentals of the company and its future potential. Keep this stock in your watch list.